Hey, good morning, good morning, good morning, everybody. Matt, the Lumberjack Landlord, here for our fantastic Sunday extravaganza. Lumberjack Landlord and the amazing subscribers of the Lumberjack Landlord channel talking about risk. So, one of the things I'm hearing far too often is real estate. It's too risky. Oh, sweet heavens. So, I think that real estate can be too risky, shockingly. Real estate absolutely can be too risky. I think the things that we always have to find is what is our comfort level with what we're doing? What is our comfort level with the amount of risk that we're taking on, i.e., how fast we're going, how little margin we're making? All of these newer videos about how, hey, it's not about cash flow, it's all about principal pay down and depreciation. Listen, unless you're independently wealthy, I had a call with an investor this morning and they are independently wealthy. They can do kind of whatever they want. They don't look at real estate from a cash flow perspective. What they look at it as is it allows them on their taxes to realize losses and do depreciation and do a lot of that type of work. So good for them. That's kind of what they're doing. Um, and but they're not dependent on it for any level of income. And in fact, they make so much income in the other things that they do. They could even be just paying the mortgages themselves and not even thinking about the rent. And so it really just comes down to your risk tolerance, what you feel like doing. So as you guys know, I will always give you an example of what I'm doing in my investment career. And so this week we finally closed on what I believe to be or could be the greatest deal that I ever do. Could be. We'll see. Jury will be out. It'll probably be out for a couple of years. But I bought an asset from a wholesaler and with a tenant that was currently engaged in a lawsuit against the landlord and the landlord in a lawsuit against them. So, tell me if you got a case of the pukies yet, right? This is a deal that 15 years ago, I never would have considered. I was like, wait a second. So I'm buying it from a wholesaler. I'm not even buying it from the owner. I'm buying it through a wholesaler, basically paying their fee, knowing that there's counter lawsuits against each other. And that not only have they gotten past the first level of being a lawsuit in the local courts, now it's all the way up to the state superior court. Supreme Court, state Supreme Court. Like, okay, all right. And so in looking at that type of a deal, right? If I'm in my first 5 years, I never do that deal. My next 5, probably don't do that deal. The next 5, I consider it. The next 5, yeah, I'm probably doing that deal. Now, absolutely I'm doing that deal, and I'm downright giddy with what the opportunity is. No, there is a ton of risk there. I recognize that I could be paying a lawyer another $30,000 to finish the lawsuit. I recognize that this person could do a bunch of damage that I'm going to need to pay, $50,000 in damages of things that they ruin and wreck, right? There's a number of issues here where it's what we call hair on the ball. Like it's hairy. It's a hairy deal. So what we have to do is we have to look at it and say, we have to find ways to A, mitigate our risk, but B, we also have to really just tap into what our risk tolerance is. My risk tolerance at this point is, even if I just spend 30,000 bucks on an attorney or 50,000 bucks on an attorney, okay. Now I handicapped the deal. What does that mean? It means that I look at the deal and say, I'm going to have to do this, this, and this. This one will cost 30 to 50. This one could cost 100. That sort of approach, right? Now, in taking this approach, again, I look at the deal and say, there's a lot of hair on this deal. There's a lot that could go wrong. Absolutely. However, I also know, having done it for 20 plus years, I know that there's a lot of these things that we can probably work our way through. So it makes me more cautiously optimistic. Again, if you're wondering why my course is what my course is, it's because that's all the experience that I've had over the 20 plus years, all the mistakes that I've made, all the things that I've created systems and processes for that now make that job a whole lot easier. At least that you're heading down the right path. So one of the things that I would just challenge everybody, and this isn't going to be a super long segment, but one of the things that I would challenge everybody on, sorry, I look so disheveled. One of the things that I would challenge everybody on is really assess your risk. Looking at make readies, looking at, the economy changing. And if you have 10 tenants, there's a high likelihood that you're going to have one that loses a job. So I always look at those things and look at my portfolio and make sure that I'm handicapping my risk. I really need to understand what my risk exposure is. That's where, if you guys remember, that's where so often on these syndications, why I'm so brutally mean on syndications, on most of them, because most of them account for a 5% increase on rents every year in perpetuity. Anybody that's been doing this for any amount of time knows that's not true. That might be the historical average, but when you've gotten 30% increases in the last couple of years, water usually finds its level. That's not mean a crash, but that does mean it returns its way back. So it's not deflation, it's disinflation. Deflation is going negative. Disinflation is just slowing the pace by which you're increasing. So you go from 8% growth to 2 or 8 to 1. That's disinflation. Deflation is you go past down 0. You go past 0 and now you're losing actual value. So as you look at your portfolio, it's important to assess that risk. Now, what are the things that I'm assessing in my portfolio when I'm trying to assess risk or trying to assess risk on a deal? Well, you heard it on the deal front. What am I doing there? I recognize that I've asked a number of people around the deal, in the deal, outside the deal that don't know anything about the deal. Hey, so if I'm following this sort of a path, and what you'll typically find is like on the legal stuff, the reason I say 30 to 50,000 bucks, I had 3 or 4 lawyers weigh in and they range between 30 and 50,000 bucks. Now, if I end up at 50, okay. But if I end up at 30, okay. Do I maybe end up at 20? Yeah, sure, possibly. And that'd be awesome. Do I end up at 70? Not likely. Not with that many people. Not with talking to 4 people that do this kind of work. And they come back and say, yeah, you know what we're probably looking at? We're probably looking at, 30 grand or 40 grand. And again, that's without them even really looking at the case heavily. I'm giving them the bullet points of the case. And I would literally tell them, hey, guess high. The other piece of the risk in that deal, like I said, the tenant doing a bunch of damage to the property. Well, then I can just sue her again and just, again, attach any asset that she would ever have and pierce the veil and so on and so forth. And I've looked at her structure and exactly how I would sue her if for some reason it goes sideways. Now, as I'm looking at my portfolio, I'm kind of doing the same thing. I am looking at it and saying, okay, well, if the market goes to 10% unemployment, and right now it's 3.5 or 4%, it's like 3.8, I think. As I look at my portfolio, how am I assessing that risk? Well, if right now I'm 100% market unit rents, well, then that's going to largely follow the market when it comes to employment. So if you have 10% unemployment rate, you're likely going to get somebody that's going to be unemployed. And then they're not paying, and then you're having to work something out because they're probably living paycheck to paycheck if they're like most renters, and most renters live paycheck to paycheck. So what I'm doing, I'm making sure that I have a little bit more in reserve than I normally would. Can I pay, a few months of mortgages if a big portion of my portfolio stops paying, or 20% of my portfolio stops paying? The good news is, as you guys do this long enough, sorry, I got to sneeze. God bless me. As I'm looking at my portfolio, and I understand that I'm going to have some people that are going to be DQing on me. They're not going to be paying, and then I have to pay money in the courts to get them out. That's a big part of it, right? So you need to be looking at your portfolio to make sure that, thank you, Hyder. I don't know why that one popped up, but it did. So as you're looking at your portfolio, making sure that you can, weather a little bit of a storm. I think it goes without saying, but sometimes this is where the risk piece comes in. Sometimes people are too often being far too aggressive in their growth strategies. And it's spend every nickel, spend every nickel, spend every nickel, spend every nickel, spend every nickel. You need to have something in reserves. You need to have to not be worried if a water heater blows up or a heating system dies. Yes, those are huge expenses, but you need to be able to be emotionally and mentally prepared for those. So that might mean you need to slow down on buying your next deal. That might mean that you need to mind the front of the store a little bit more. So as I'm walking through and looking at my portfolio, I am keeping a little bit more in reserves. I am honestly getting a little bit tighter on my tenant pool. Just am. I mean, I'm changing some things there. I'm increasing some things, making it more difficult to rent from me. I don't need 100 people to want every unit, even though I have that. I don't even need 10 people that qualify for it. I really just need one that's a really good fit. This last weekend, we passed on some renters that were halfway decent renters. They're halfway decent, but I think they're in an area that when the economy, gets a little bit of contraction going, I can get a better renter. And that's what I'm looking for. I'm looking for a better renter. So make sure you have those quality of renters. Make sure you have a little bit more in reserve. And just make sure that you're remaining, or if you're not conservative, you need to get a little bit more conservative. Because again, does a 20% reduction in property values impact you? Largely, it doesn't. Largely speaking, it doesn't impact you at all. And that's so often what outsiders that don't know what this game is looking in. It's so often, I hope it all crashes. Me too. Because I'm more ready to buy a house and they're going to give me money, a guy who has money. They're going to give me money before they give you money. So I'm going to go buy more stuff and you're going to watch me buy it. How's that feel? That's what a lot of them don't understand. It's like I've been saying for about a year and a half. When we start to see the trend, when we start to see things going down and credit quality go up, you just have to be in that position. Have more monies in reserves, have better quality credit, have better quality tenants, have relationships. This is what I talk about all the time. Net worth being your network being your net worth. I have quality relationships. We tried to do a deal with one of my banks and they backed out of the deal. Thankfully, I have such good relationships that I got 3 great recommendations on other lenders. And one of them I ended up closing it with. We closed the deal on Friday. A little bit of a mess. Wasn't their fault. It was definitely the seller's side. It was a little bit more than a little bit of a nightmare. But again, as I always talk to you guys, I always share with you exactly what I'm going through and exactly what I'm doing in my portfolio. I'm not running to try and find my next deal, nor should you. Really make sure that the house is set. You can still be shopping. You still need to be doing your daily work. You still need to be looking at your market. You still need to be understanding what's going on out there. But don't get over your skis. Don't have too many projects going on. Don't have too many vacancies. Don't have too many yeah buts. Don't have too many, hey, but when this is done, yeah, I get it. I have 2 projects right now. Hey, when these are done, they're going to add, I don't know, $28,000 to the bottom line or to the top line. And that's great, but I'm not out there looking for another big, huge project. I've got 2 more that we're doing in planning, but that's a spend, but it's not anything that I'm going to get a construction loan on now to start the project. So hopefully that helps you guys. I always say I try and create great content for you. Make sure you hit the like button and we are going to jump into the questions. Excuse me. Dividend Dave, good morning. And first, we might add. Frank Contreras, good morning. Josh Burdick, good morning. Ninja Vanish, same. Marina, good morning. Good morning, Marina. Chris Wissing, patiently waiting for the show to start, working on my list for Make Ready come next month. Love that, Chris Wissing. That's awesome. Dang, I'm late. It's okay, Kippos OS. We didn't start without you. Good morning, all. Merry Christmas. Merry Christmas to you guys, too. And happy holidays. Good morning, all. Smash the like button and strap in. This is going to be great. Yoder, I appreciate the enthusiasm. Hopefully it was as good for you as it was for me. Dear heavens, I'm having trouble with this new system that we're using because it gives you the reverse. It's kind of crazy. It bothers the crap out of me. Anna Kay, good morning. Harry Hanover, good morning. Bunch of course folks here. Fantastic. Dividend Dave and Frank Contreras, I believe Josh as well, Marina, the Yoder, Anna Kay, Harry Hanover. Good morning, guys. Good morning. Ninja Vanish, like button before the video start clips. Thanks, guys. Appreciate that. Good morning, Hyder. Good morning. Yes, REI is too risky if you don't know what you're doing. That's exactly right. Exactly right. 100%. Absolutely. Morning, Hyder. Yep. Good morning, landlords. Keith Hager. Good morning. Brian Beck. Good morning. Another alumnus. Jesse Thomas. Good morning, Lumberjack crew. Good morning, Jesse. There's my buddy Dion. Oh my goodness, that reminds me. I'm sorry, Dion. I should have texted you back. I totally saw it last night and I didn't get back to you. I don't even know what day you sent it. My life is a little bit crazy right now, just a little bit. I think it goes this way. There we go. Man alive. Today. Good morning from Washington, Flavio. Good morning. Suit, countersuit. Yes, sir. Manny W, good morning. Hello, Matt. Hoping to be offended today. There is a chance of that happening. I think I covered that in the risk thing. Risk mitigation is super key. First rule of investing is don't lose. That's exactly right, Hyder. You don't want to lose a property. We didn't lose in 07, 08, 09, 10, 11. We could have. We could have literally, the debt was so bad on those assets. I literally could have just said, here are the keys. You can just have it. You can have it. The properties were worth 30% less than what I paid for them. You can have it. Here you go. But I didn't want to do that. I made the deal. I had to stick with the terms of the deal. So I followed through. And it didn't end up being great for me that I followed through, but I did the right thing. That's all that mattered. Oscar, good morning. John Williams, good morning. Hyder, bless you. That was for my sneeze. Thank you, Hyder. Good morning, Laura. Hey, BF, good to have you back. Missed you last week. Hyder, how long have these suits been going on? Great question. About August or September. August or September. So they're 3-4 months old, these suits. And she won. The previous owner of the asset won the first case in court and won the appeal. Then it got appealed to the superior, so state superior court or Supreme Court in the state. And so it's been appealed to that level. So that's where we are with that stuff. BF lumber, don't sell any real estate holdings. Prices are going to soar with rates coming down. Yeah, I think so. I mean, I think for me, there's certain assets that we always just want to kind of get out of. Single family stuff just doesn't make a whole lot of sense for me. It just really doesn't. And so sometimes we've bought portfolios with deals with a single family in it. So we redo it and we sell it. I've got a little lakefront property. I'll show you guys. We'll probably do it in the springtime. We've got basically all the systems set up, everything taken care of there. New well system. Like it was a lot of work to get that thing done. Right on the waterfront, 60 feet of waterfront. And so we'll see, but we're still going to sell that asset. Because that's one of those properties where I had all the best of intentions and it just didn't work out. And so now we pretty much own the property outright. So when we sell that, we're going to be able to go buy something that's cash producing. So we're kind of taking a look at it. And yeah, BF knows. Yeah. I mean, again, it's, you sell your stuff when rates start to come down. I mean, activity's already picked up a little bit and it's December. BF hit the like button. Thank you, BF. REI Stoners. Good morning, sir. Morning, Josh. Josh. Yes, sir. That was my next, who filed first. Landlord filed first. Yep. Landlord filed first. Yep. Is anyone in the suit being smart or clever? Good question. The tenant is trying to be clever. They're not very clever. The landlord, hold on. Sorry. Some people, it's the same person. I'm on my live and they know I'm on my live, but they forgot that I was on my live. So the tenant is trying to be clever and the landlord is being pretty smart. Yeah. That's why they lost. That's why she won her first 2 cases. That's why she won the case and then it was upheld. So I don't know if they want to keep on looking. Honestly, I don't know if they want to keep on looking to fight this thing. I think if you're the tenant, I think I've read the case. I think she's in trouble. Because the landlord did everything that they could do. So I look at it and I think, yeah, I think that could be dicey. So we just closed on the asset on Friday. And so Monday and Tuesday, I'm going to be in contact with the attorney that is that was on the seller side. I'm going to just be talking with that attorney and getting a 1 hour briefing with them and understanding exactly what's going on there. Yeah. James Walsh, small multis in my market are at an all-time highs like yours. Yep. Do you still buy them if it's a break-even cash flow? Nope. Would you buy a duplex you love that only cash flows $200 a month? Nothing works. I probably wouldn't. I probably wouldn't buy something that only made a couple $100 a month. So let me preface that by saying, if you have $1 million in cash or even a $500,000 in cash, I might, but that's because I have a massive cash position or that person in the story. For me, I just don't love those deals. I don't love them because, rates popped down. They could go right back up. I don't think the Fed is going to move as fast as everybody else does. And that is the only person, and maybe I just love Simon, the uneducated economist, as much as I do, because I agree with him on so much of this stuff. But he's been doing a crushing series on talking about the Fed and credible threat. And what I hear every person missing, and I picked up on it too, probably 6 or 9 months ago, is everyone saying, yeah, the targeted, inflation rate's 2%. No, it's not. No, it's actually not. They're not looking to hit that target. They're looking to average that over a 10-year period. And if we just got off of 5 and 7, what does that mean? That means that inflation has to go negative. Prices actually have to start coming down. If you believe that the Fed is actually shooting for an average of 2% inflation, I happen to think that they are shooting for an average, not a target, an average of 2% inflation. So I think the market is going to act like a bunch of spoiled, naughty children when they hit 2% and then the Fed doesn't cut. That's what I think is going to happen. That's what I think is going to happen. So I think I'm in Simon's camp. I missed his live yesterday. But yeah, I think Simon's crushing it. I think Simon's crushing it. I think he's exactly right. There's a credible threat there. I think they're going to hold on to these high rates. 6 rate decreases next year. Want to bet? Literally want to bet? Ask Dopey, Adventure Boy. Ask him. I'll bet him. Bet him 10 grand. There's not 6 next year. Bet you 10 G's. There's not 6. No way. That's just me. But then again, what do I know? So yeah, so James, I don't love deals that don't make money. Don't love deals that don't make money. If you're independently wealthy and you need the depreciation because your other businesses are working so well, then you could start to talk me into it. But generally speaking, for an investor, not a fan. Robert Farinelli. Hyder. Did the landlord document like crazy in preparation just in case and it worked out? So I think that it was a fairly straightforward case. I won't disclose what it is yet until it's over. But she found the tenant in violation of a couple pretty important parts. To the business and to the lease. And asked for remedy, didn't get remedy. And then their only option was to sue at that point. So that makes sense. Robert Farinelli, thoughts on selling Nashua property? I have a serious tenant problem where I can't seem to get a tenant to last over a year. Have to use 650 credit score because no one has above that. Yeah, I'm not a Nashua guy, Robert. Like I told you, and I think I know obviously investors have made it work there, but I believe that the Nashua class of tenant is in many cases worse than the Manchester class of tenant. And so I consider it. I consider it. If you're seeing a property that just consistently isn't working, I consider it. I've sold out of assets and bought into other ones. You know, not every deal that I've bought was an awesome deal that worked out great. Some of the deals that I bought were kind of sucky deals. I did a flip, and at the end of the day, I ended up selling it to somebody that I knew. It was a great house. I didn't make very much money on it. We had a bunch of stupid issues that occurred. It was like we had $30,000 worth of surprises. And that was huge because that was more than 10% of the value of the house. It wasn't like 30 grand on $1 million property, where it was, 3%. It was, it was 10%. So I always consider that stuff. I always consider that stuff. If you can, alleviate all your pain and put 100 grand in your pocket, I understand why that sounds sexy. And who knows what the market's going to do in the next year, 2 years, whatever. So yeah, I've sold out of assets, sure, with the purpose of buying a better asset. So, I would be looking at 1031. I wouldn't mind selling the asset, but I would be looking at 1031. What am I going to be able to get into? What do those numbers look like? Can I improve the quality of the asset? Can I get a better asset? Can I get better tenants? Can I get in a better area? So I'm always open. I've sold maybe 10 or 12 assets. But that's what gives me the ability to, grow and grow quickly or grow faster than many, is because I look at what the asset is and I put it through the calculator to see if it makes sense for me to keep the asset. Hopefully that's helpful. Keith Hager, the more people involved in a estate sale, the longer it takes to go through probate. Sometimes it's like, so I've actually bought a deal that had 47 people, 47. Because what happened was it was grandparents that sold the deal. But it was the way that their trust was structured. It covered kids and grandkids. So it was 47 people were a partied to that estate. 47. It's a lot. So 47 people were a party to that estate. We ended up working something out because they did obviously have an estate head, and we knew that we were going to have to make a very simple offer that would quite frankly get them all to pay attention. And that's what we did. I bought that building 6 years ago. I paid $175,000 for it. I put $175,000 into it. So I was into it for $350 and it's worth probably $700 now. But more importantly is it does, it does $6,200 a month in income. Is a more important thing. Yeah. So not my experience, Keith, is it can be that way. It's usually about the more how active they are instead of the quantity. Like for all these people, 47 people, right? When that thing sold, when they were looking at the difference between 165 and 175, it's $10,000. It's 50 people. It was $200. It wasn't moving the needle for them. As a thought. Robert Fernandez, or should I make this a permanent Section 8 property, have a 4-month Section 8 tenant? No problem so far. You look at it, and I can tell you, if you've watched any of my other videos on Section 8, next year's numbers going up and the following, 2024's numbers going up, 2025's numbers going up, and 2026's numbers going up. It's based on how they calculate it. I shared with you guys in one of my videos how they calculate that. It's going up. It's going up next year and it's going up the following year. So it's not a horrible idea. If I can get a Section 8 tenant in there where there's not a risk, then I would look at doing that for sure. BF, cash makes 5.5% in the bank right now. It does. We'll see how long they can hold on to that, right? If things start obviously adjusting downwards, likely no. Are you keeping the existing representation or bringing in your own lawyer? I want to talk to him first. I want him to treat me like a 5-year-old and walk me through all the steps of it, is really what I want to do. And then after having that conversation, I'm going to talk with the tenant. It could just be like I've taken over some tenants that the old landlord was like, they suck, they're awful, they're the worst. And then come to find out that they weren't really that bad. That landlord sucked. They were brutally awful. I've also seen that on the other side where they were great with the old landlord, but because I was the jerk who raised their rent, I was a demon. I literally had a guy call me on a Facebook page. He goes, "Yeah, this is the jerk landlord that raised my rent from $800 to $1,100." Uh-huh. And the $1,100 was still $400 under market. Bad move, dummy. So we don't need to get punitive. We can just literally say, we gave you a $400 discount because we knew it was going to be a big jump. P.S. By the way, another one's coming because your lease is over and you're now way under market. It's kind of how it goes. You can start making the rules when you risk all your capital. Flavio Macias. I'm learning how important are inspections for beginners. I just got a sewer line problem, $24K not expected. Flavio, this is what I'm talking about. No joke. If you follow me on Instagram, you saw what I just had to post. Now that was fixed for $1,100 or $1,200, but still, here's the thing. I've seen $30,000 projects. I've seen them. Guys, camera the line. It's $200 to $300. It's not expensive. It's not expensive. Get that line cameraed with a self-leveling camera so you can see from the clean out in the house all the way to the stub out in the street and hopefully all the way to the chimney in the street. You want to be seeing that entire thing. You need to make sure that none of those lines are old and clay and they've collapsed. You need to make sure that they've not used a product called Bermico on the connection where we know that that stuff is collapsing everywhere because it's reaching its life expectancy. So I'm literally thinking of contracting with a company to basically just do that Bermico replacement because I think that there's going to be a lot of properties in the next 10 years that are going to need that Bermico replacement. Bermico is basically paper covered in tar. And they thought that was a good idea. Some people. Jesse Thomas, I'm with you, James Wells. Starting to look at getting creative with STRs, like a pickleball retreat in the country. Anyone else here playing with ideas like this? Guys, I don't like STRs. I don't like STRs. I don't like them. I don't like them. Because so often you need the husband and wife or the two adults in the family to be able to cover the mortgage. And if one of them loses their job, they can't cover the rent. And then what do you do? Well, they're out of work. Yeah, I get it. Well, then we can't pay. Okay, then I can evict you. I don't like STRs. And the margin's so small. I've not seen an STR with a more than 300 when purchased with a more than $300 a month profit in a long time. $300 a month. Water heater blows $2,400 if it's a gas one. Heating system goes $10,000, $11,000. Roof $10,000, $12,000. That means you're going to lose 3 or 4 years of your income on a small multifamily duplex, tri, or quad. The numbers aren't like that, and the risk that you have that somebody losing their job means that rent goes unpaid is far, far, far lower. Like I said, I just don't like STRs right now. I haven't liked them for a long time. I especially don't like them now. Keith Hager. So you're saying don't buy alligators. It's a little bit what I'm saying. A little bit. All-nighter. I looked at a 2-2 in San Diego for $150K. Very interesting. But it's only a Manu. Oh, okay. Home with no land and an attached space rent of $1,500 a month. Mortgage would be $800 and rent would be $2,400. No land or tax, but no upside either. So that is one that I'm not looking for upside, Hyder. That's one where I'm looking at the return on my capital. You know, it's nice to get the upside, but you just have to figure out tax-wise what that looks like from a depreciation perspective. But yeah, mortgage 800, rent would be 24. I mean, I don't care that much about having a ton of upside. Like if I could do 10 deals like that, $8,000 and bringing in 24, then that can fund the opportunity for me to go buy something with land that's more of like a standard deal. I would seriously look at that. Seriously look at any investment like that turns into that turns into that much capital, that much return. Yes, I was trying to not ask any risky questions about the case. I understand. Yeah. All-nighter, WTF, 47 in probate. Yeah. Crazy. Yeah. 47. There were 47. So there was no, that's not true. There was an executor of the estate, and there were a handful of trustees. There were a decent amount of trustees too. Yep. All-nighter hider. You can start making all the rules when you risk your capital. M. Hawkins. Exactly. You nailed it. Exactly right. Yeah. If people don't like it, go risk your capital. You go do the work. Go ahead. You do it. I'm not stopping you. You're buying up all the homes from people. You watching the channel? I don't. I actually don't buy anything single family. The only way I get a single family is when another investor realizes what a turd investment it was, and they make it part of the package. It's kind of like doing a hockey trade where somebody ships off a player and they get a top draft pick in return because they're shipping off, they're basically paying to ship off the salary. Like, this is what we're talking about. Like, they will bundle stuff they'll have to bundle better assets with that single family to get rid of it. Or because they don't want to redo it and then go to market and go retail, because that's again going to be capitally intensive. So that makes sense. SK, as a starter investor, what would be a good house to buy? A small multifamily that you house hack. I would say a duplex where you rent out a room or so in your side and rent out the other side. That's your best. That's the utopia. The next closest to that is, I would do, if you can afford it, I would do a fourplex first. And same thing. It's tough to find like 4-bedroom fourplexes. Those are tough to find. In all my investing career, I found 2. They're really hard to find, but I can tell you, they both absolutely print money. They print money. They're awesome. They're awesome assets. So yeah, if I'm in your shoes, SK, looking for that new investment, I'm looking at potentially house hacking the unit, at the very least, small multifamily. Yeah, at the very least. REI Stoners, Matt's course is helping us a lot. Thank you, REI. Thank you, Josh. I really appreciate that. I took all the verbiage you talk about and called the executive director of the housing authority in my area, and the conversation went extremely well. Felt like a pro. Good for you. Good for you. Can't do it for you, and you guys don't ask me to do it for you. You just ask me, hey, when I get that opportunity, when I make that opportunity, how should I handle it? I'm so happy to hear it went well. REI Students continue, said, pro talking to him, and he was impressed with me calling. Thanks, Matt. You're welcome. This is what the course is for. I want to demystify it for you. I want you guys using the course, all the mistakes I made, all the lessons I learned, and hopefully avoiding those things. It's not to say you're going to avoid everything, but you're certainly going to avoid a lot more. And those, we all know, real estate mistakes often come with commas. They often come with commas. That was a soda can, not a beer can, just so you know. So yeah, that's great. I'm super pumped that went well. Never heard of Bermico. Must be an East Coast thing, says Hyder. It is. It's basically like orange. It's basically like paper made orange, covered in tar, and water goes through it. It's how they connect the house to the line that's going to the stub out, and they collapse because they get weak over time. Who would have thought paper gets weak when it's covered in water over decades? Yeah, so no joke. REI Stoners, we are now accepting vouchers. That's awesome. Congratulations. It's a whole big tenant pool. Now, keep your rules the same, just like I talk about in the course. Keep your criteria the same, but, have the opportunity to engage with a whole different subset of tenants, and one that could be a great fit. They're not all bad. They're a higher percentage of bad than the market, but they're not all bad. All Nighter Hider, Lumberjack Landlord course. Thank you, Hider. I appreciate that. Yep. If you want to know, just look at the course. You don't have to buy it. Just look at the course and look at the syllabus and think if that's going to help you. I think there's a ton of people in here that it's saved them thousands, if not tens of thousands of dollars. I know Robert Farinelli. I know one of the things that he learned from the boot camp, it saved him like 14 grand on an upgrade, a change that he was going to do that, quite frankly, wasn't going to make a whole lot more money. So that's really, really important. Robert Farinelli, what counts as criminal mischief if a tenant trashes your property? The bigger issue is not what qualifies, but what the cops are willing to do about it. We have a couple of towns, and you guys know my feeling on cops. I love them. I love cops. I love firemen. I love, these public heroes. You know how I feel about our armed forces. Like, yeah, I get gushy. So you know how I feel about these guys, but I have one town where I'm pretty sure it's leadership. They're lazy. They're stupid. They don't want to make any effort. They had no problem with the fact that I had a $10,000 boiler stolen. Like, the response and the way that I was treated when filling it out, it was like, listen, shithead, this is a problem. Respect me, respect my rights. Like, you're doing a bad job. And then I went and tried to report it, and I couldn't get a call back. Literally couldn't get a call back. Who do you call at that point? Like, I couldn't get a call back. And I didn't have the time to bring it to like the state AG. Like, it was like, 10, 12,000 bucks or something, but couldn't get a call back. They were not interested in talking to me. They wouldn't even look at the case, nothing. And I handed it to him on a silver platter. I was like, here's all the information. Couldn't get him to do anything. Completely useless. It was my first experience with the police where I was so deeply disappointed in how they handled the situation. I was just mortified. So what you have to really understand, Robert, is who the police are and how they would pursue it. And that might be a conversation that you call and you have with a cop and say, I'd like to understand what this process would be. All Nighter Hider, the down would be $30 for a DSCR and $100 for the downside would be $30 for a DSCR and cash flow $100 after Pai Tai. Oh yeah. Then that's not enough then. Yeah, for sure. Yep, that's not enough. Dishes every day. Hit the like button. Thank you, Dishes, very much. I was just talking about Simon. Awesome series he's doing on the Fed, incredible threats. I think he's taking people through something that if they can understand it and they can put it to action, I think it will make them very wealthy. It blows my mind that guy doesn't have 1 million subscribers. It totally blows my mind because he's awesome. Looking forward to spending some time with it at the ORAD event. And I think we're doing a collaboration in February sometime. That's my understanding. What a great winning story, Josh. You making a video on that. Yeah, that's a good idea. You should make a video on that. Absolutely. I don't mind if you share what you learned from the course and all that stuff. I don't care about that. Like, share it. I want people to hear the story of how you got yourself in a much better position. That's what I want people to hear. So I think that would be awesome. All Night Hider, great question. That seems like a question for a local REI attorney. Yep, that should all be asking. Agreed. I think that you have to really talk to an attorney. Yes, that's a great idea. You can also call the cops and just say, it's my suspicion that this is occurring. What should I do to make your job easier for when if it does go down this path? Kyle Dorn. Hey, Kyle, good to have you. Hey, Matt, I also had the same exact experience with Section 8 Executive Director, thanks to your course. That's awesome, guys. That's so good. So that's an easier call to make. I'm going to push on you guys a little bit. That's an easier call to make, but the Executive Director is really important. I'm so glad that the call went well, and I'm so glad that you've got a now new bucket. I wanted to teach you guys how to do that. Section 8, generally speaking, for me, has been pretty positive. With not my biggest positives, definitely my biggest negatives, but it has helped me do the most important thing to me, which is diversify my portfolio. But yeah, generally speaking, I won't do units specifically to do them for Section 8, but I won't stop them from applying. by any stretch. And they're not a protected class, so I can say no. But it really comes down to qualifications. And what we find consistently in my state is that maybe less than 5% of them have a 680 credit score. Less than 5% that I've seen. It's pretty bad. It's pretty bad. How much does it cost to change out that Bermico crap? Good question, BF. It costs, oh, here, wait, we'll highlight this one. There we go. The next question was, how much does it cost to change out that Bermico crap? You're looking at a day of an excavator. Yep, no joke, because you're probably 4.5 feet down. So you're looking at a day of an excavator. And then once you get it exposed, you pull it out. You can put in a new connector, which might be $100-150 worth of parts and pieces, and connect it all back together, have the plumbing inspector look at it. And then I always put a red line of tape down. It says like a caution tape. Put a red line of tape down right on the pipe, and then go up another 6 inches and another red line of tape, and then cover up the rest. But you put the ground back where it belongs. And, so you're looking at probably $2 to $3 grand. $2 to $3 grand, I would say. You can get it done for less. But I wouldn't want to be digging a lot of the rock and clay and things like that they have around where I am. It makes it hard. Let's see. Keys and questions. Welcome to the channel. Good to have you here with us. I'd really love to hear your opinion on this book called The Most Dangerous Superstition by Larkin Rose. Keys and questions. Thank you very much for asking. I don't read. What's it called? I mean, what's it called? What's it about? Tell me what it's about below, underneath. Maybe I'll listen to it. All-nighter. The course is free if you stay here and watch for a long time. The course costs money if you want it in aggregate on your terms. Yeah. Both ways work. One's better in most cases. Yeah. Yeah. $30K. Okay. That makes sense. Yeah, that makes sense. Yeah. So you got to basically come up with a $30K deposit. Yeah, I get it. But if it's only making $100 on $30K, yeah, then it's a garbage deal for sure. There's a lot of stuff. So I'm a little bit different than Dion. There's a lot of stuff that I won't talk about on my live streams that is in the course. So you can't, if you watched everything of mine that I've ever done, you'd get probably 75% of the course. If you watched everything I ever did, 25%, I don't talk about on in mixed company. I only do it in the course. Jesse Thomas, just to clarify, STR to you is short-term. No, sorry. SFR, single family. Yep. Single family rental. Sorry. STRs, I don't do any of those. I think that market's shifting. SFRs, sorry. Sounded like you were talking about something different. We're having to boot bed tenants. Yes, it is. Well, but you've seen Millennial Mike too. He's had some pretty bad experiences. And for a lot of the extra work, he's a little bit ahead. So that's where I'm honestly watching. I watch all that he's done about that stuff. And so I watch all he's done on that stuff because I do not want another job and I don't want something else to outsource. I don't want something else bitching about this, that, or the other. Like if I could outsource to a host and still make more money than what I was making as a long-term, I would consider it, but I can't. With cleanings and outsource of hosts and them being available and the cut that they want. I'm better off having a long-term tenant in there. Much better. All-nighter header. Uneducated Economist is a very underrated channel with his cult following. Good cult. Yeah, exactly. Good cult. I agree with that. Good cult, not bad cult. Not drink Kool-Aid cult. Nope. Good cult. Yep. Love watching his stuff. He's fantastic. Real deal. GM, keys and questions. Thanks for the question. Yes, thank you very much. Keys and questions for the question. Robert Fairley, true. Saved $14,000 when I wanted to put in an IBC boiler, but showed the current setup to Matt and recommended to replace current furnace with a York instead. we don't always, so we will pivot. And what we want to try and teach is the things that you need to understand so you can pivot. We get in our minds that this is the only way that it can be done, or this is the way that it has to be done. And then very often that might not be the cleanest, least expensive way of doing it. So it's always understanding the right questions to ask so you can not only achieve or fix the problem and achieve success, but it's also what are the other questions I need to ask so I can understand what the defense is showing me so I can pick the pocket, which is the right direction to go that's going to have the least resistance or give my greatest return. Very often they're not the same. But you can then pick. You can say, hey, I get a lower return doing this, but I'm much more comfortable doing that. Or I get a much higher return doing this, but man alive, it's going to be a lot of extra steps. So that's kind of the thing that happens. Kyle Dorn, going through my first eviction. I think I saw that. Fearful that they will destroy the property. Understood. My attorney said if they do, the juice isn't worth the squeeze to go after them. Any thoughts? Attorney is a big investor. So I love that you have an attorney that's a big investor. He's sometimes right. It depends on what your state law is. There is the ability to sue them, and you can do it in small claims court, and you can represent yourself. It depends on what your state limits are, but you can you can win that against them, get a judgment against them for a certain amount. You can then sell that judgment to a collection agency and get a percentage of it. And it ruins their credit. It ruins their credit. It ruins their rental history. Often, if they understand that, they will make it right. I have somebody that has done that with a bunch of their units, and guess what? Thousands of dollars a month they get, just checks show up. And then if he does the reconciliation and somebody forgot their check, he reports non-compliance to the court, and the court then issues a bench warrant in our state. And then if you get pulled over, you have a bench warrant, you're going to jail. And then to get out, they have to pay the fees to get out. So the juice not being worth the squeeze, if you're a big investor with a lot of money, maybe. He's also an attorney that gets paid probably $350 an hour for his time, maybe even $400 an hour. And this isn't something that you need an attorney for. So it's something that you can absolutely do yourself. All-nighter, but it's an actual cash flowing deal in San Diego. I don't want it, but I found one. See, it's possible. Keys and questions. It's very interesting. And it's about the people you love, police, order followers, et cetera, et cetera. Definitely get the audiobook. It's free on YouTube. Very cool. Keys and questions. Thank you very much for that. I appreciate that. I do. I consume a ton of data. I just never have time. If I'm sitting down and reading something, nope. I'm going to be asleep in like 3 minutes. So listening though, I'm a big multitasker. Like it. Like I'll watch a hockey game, but have a book on in my ear. Robert Farinelli, boot camp and course pay for themselves 14 times over. Thank you very much, Robert. I appreciate that. I'm glad. That's always the goal. That's why we priced it the way that we priced it. We wanted to make sure that it was expensive enough to have you consider it and think about it, but inexpensive enough that if you took it and you applied the things in the course, it's going to give you a massive return. That certainly was always the hope. BF, you said that one property cash flow is 6,200. Is that gross or net? Which property? I'm not sure which one you're talking about because I have a bunch that are that net or gross, but I'm just trying to remember which property. Sorry. And I've talked about like a half a dozen today. But BF, ask me or give me an example of which one I was talking about, and I'll tell you if it was gross or net. Because I do have some that are net that much, and I do have some that are gross that much. What's the difference in average yearly appreciation between SFR and multiplex 2 and 4 unit you have seen, given you own both? So that's a great question. I don't know that I've ever really thought about it because I know that my return on capital is junk in these single family homes. I can tell you that, let's see. I haven't bought a single family home specifically. Like it's been part of pack. That's not true. I bought one like a year and a half ago, but I bought it because it was so outrageously cheap. Actually, no, I bought one 2 years ago. So I bought one 2 years ago, but it was a single family home. But I found out within my due diligence that it was actually a duplex. I converted it from the single family that it was being used as then. I converted it back into a duplex. And so now that property does $3,800 a month in rentals income, $3,800 a month in rental. I bought it for 160 and I put 40,000 bucks into it. So I was 200 into it. But my debt on that house, I think we refied it as well. And I think even the refi debt might be 2,500. But the rents, like I said, are like 36 or 38. So yeah, we make 1,300. And that's mortgage, that's principal, interest, taxes, insurance, and expenses, I believe. So yeah, I mean, it makes probably about $1,000 a month is my guess, right around there, somewhere around there. But yeah, great question. Yeah. The 2 to 4s. So the single families have gone up, the duplexes have gone up, but the rents in the duplexes have caught up to the single families. So a 4-bed, 1.5 or 2-bath single family is now, boy, I mean, I saw one just go up for $3,300 yesterday, and that was a 3-bed. I think it was a 3-bed, 1.5 bath. Our unit is what is our unit? It is a 4-unit, and it's not anything like a single family home. I mean, it's a legit, like, kind of tinier duplex, tinier rooms, things like that. But that one's $2,750. And so it's a $400 a month difference. But the difference is I have $2,750 on that side of the duplex. On the other side of the duplex, I'm getting $3,000. So, and the house didn't cost twice as much. The house just appraised for $630. And then that single family house, like I said, that one's going to cost, I mean, it's probably a $450,000 to $500,000 house. So you're looking at $100,000 more, maybe $150 more, but you're looking at, call it, $3,300 in rent, but on the single family, you might be making $500, $600, so the taxes on that are outrageous. They're almost the same as what my duplex is. But the duplexes, we just refied that property. It appraised for $630, $5,750, $5,800, right around there is the rent on a monthly basis. And I think our mortgage is 38 with Pi Tai. I mean, it still makes a lot of money. Still makes over $2,000 a month. But that one's more longevity. Yeah, that one's more longevity. James Wells, I have 4 properties and a first-time call with an insurance broker to save money. Love that. Do you have a specific criteria like Dion? He said $300K of injury, full replacement value, and a $10K deductible. Thank you. You're welcome, James. I do a little bit different because I have the know-how and the resources to do a bigger project. So I do a $20,000 deductible, truthfully using insurance for insurance purposes. So I use a $20,000 deductible. I do $500 for injury because $300 is kind of a layup. So I do $500 for injury, and definitely full replacement value. Yep. So we're almost exactly alike in that regard. I have a higher deductible, but I have much more coverage. And then I also have my umbrella policy, which I'm actually getting requoted tomorrow. Brett Beesboer, good morning. Hope it goes well, Kyle. Keep us in the loop. Yes, please. Thank you, Hyder. Hyder, I recommend read a short poem by Rudyard Kipling titled If. That's a good one. It is a good one. All-nighter, LOL. I watch hockey and listen to content as well. Love it. Yeah, it's the best. It's the best. I was a little bit spoiled in the last week. I think the Bruins had like 5 games, and I love to watch Vegas, but not unless they're on an East Coast trip, because that West Coast trip is brutal. or West Coast, because that's where they are. The game doesn't start until 10:30 at night. It's like I'm melting at that point. BF, going after a tenant that you were evicting 99 times out of 100, they ain't got a pot to piss in. Yep, you can't get blood from a stone. It's true. However, I'm not looking for the 7K. It's great to get the 7K settlement. The issue is what you want to explore is getting a monthly payment from them, even if it's $50. Because if they don't do it and you file non-compliance, that's where one of my other real estate buddies, he does it religiously. He does it consistently. He gets thousands of dollars a month in checks. He has some that are as old as 3 years old, 4 years old. They're still paying down. If that's the model that you want, you can make money from it, because if they don't, in our state, I don't know what it's like in your state, but in our state, if you don't pay based on what you agreed to in court, you file and you get a non-compliance order filed against you, the judge will grant a bench warrant. And then they're notified, and you can notify them of the bench warrant. And then all of a sudden, they're going to be more than happy to try and clear it up. We got more aggressive with a tenant this last week. Kind of blows my mind more than a little bit. It just shows we were being too nice. They had lost their job and they were working through it. And, they'd been a good tenant. And so we kind of worked with them and said, yeah, that's fine. Just make sure you keep on consistently paying. We wanted to just see them consistently paying, figuring it out. And they did. They paid a fraction of the fraction. And we had asked them in August, hey, you've got a job now. And they're good. It's a better job. You've got a job now. We really need to see, you get caught up. No answer. We really need to see you get caught up. No answer. We really need to see you get caught up. No answer. Okay. So we post papers. 5 days later, we got a check for $4,500. She was holding out on us. It's unbelievable. $4,500. I had basically taken that money and said, it's a loss. It's a loss. We're going to have to go to court and do blah, 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 blah. No joke. She paid it. Shocking. I was pissed and happy all at the same time. The property that you paid $170. Oh yeah. The property that I paid $175. Yeah, that was gross. That's gross. Yep. Oh, yeah, that's gross. Yep. The 175 and 175. Yeah, that's gross. So, yeah, so that's $6,200 a month. It's $3,200 for one side, $3,000 for the other. What is the nut on that? It is, I can tell you in just a second. The nut on that one is my goodness. It is come on. That one is, as I read, I know, horrible television, I get it, but I bet you want the answer. Oh, I hate this system. Like, how hard is that to do it right? It is $26.60. So $26.60 is the $26.60 is the mortgage with taxes is $26.60. That doesn't include insurance, which add another $140, let's say. $26.60, $2,800. Water and sewer average about $100 a month. 28. Nope. 29. Other expenses, figure $300 a month for like plowing and things like that. So yeah, I mean, that's probably 32. So that building probably makes about $3,000 a month is my guess. Right about there. Yep. So gross rent, 62. Yes. What are landlords going to do when rent prices fall, but all of our other expenses have gone up? I don't think that rents are going to fall that much. I think if you look at Dion's content that he just did, I don't think they're going to fall that much. Where we're seeing pricing pressure on rents is in A-class stuff. I'm still not seeing it. You know, that's a good question, BF. I'm not seeing it. I'm not seeing rents fall. Every unit that we've rented for the last 3 years has been higher than the previous time we rented it, even now in December. It's highest it's ever been. We're renting one right now that was rented for $13.50. It's $16.95, and we had multiple opportunities to rent it. And that's in winter. That's in December. Like in the spring, I think they'll go up again. I think it's still a supply and demand issue. I really do. How can I have 100 applicants for every unit that I post, or 200? How can I have that? I mean, rents are not going, I don't think they're going down. I really don't. I think that there will be pockets of it, but I think it's mostly the brand new A-class stuff, because I can tell you the A-class that's right around the corner from me, it's full, but I had a tenant tell me what they're charging for a studio. $2,365 for a studio. $2,365 for a studio. And that doesn't include parking. Parking is an extra $150. They'd be $2,500 a month for a studio. That's insane. That's insane. It's absolutely insane. That's nuts. Elizabeth G. Welcome to the channel, Elizabeth G. What is a reasonable cash flow per door, apartment or single family home? It really depends on where you are in the country. So the most important thing is to really learn your market and understand kind of what they're seeing. So single family homes, in my area, you can have single family homes that are, you can rent for $2,500 a month, all the way up to $12,000 a week. That's how big the change is. We have properties that, are as cheap as, 250 to 300, with stuff that's as expensive as 25 million. And that's all in the same town. It's what's so crazy. So that's a great question. Usually, Elizabeth, the way that I would look at it is, what is the return on the capital that I'm putting into the deal? So as an example, if I am, buying a property and I'm, putting 20% down, I'm putting $50,000 down, and after expenses, I'm making, $500 a month. So I'll make $6,000 a year. That's a deal that I do after expenses and everything else. However, a lot of deals that you look at now, you put $50,000 down and you make $5,000 or $6,000 before expenses. And so when it's all said and done, you might make $200 a month after expenses. Those are the types of deals, single family, certainly, that I avoid. Apartments, I want to see, not big building apartments, but more like 2, 3, 4 unit buildings. 12s and 15s and 20s are fine too, but I really like those. I really like those 2s, 3s, and 4s. Residential debt, 30-year fixed rate debt, not a lot of risk. So those are typically the type of assets I like the most. Elizabeth, welcome to the channel. Hopefully that answers your question. SK, how do you resist your temptation to upgrade to a luxurious primary to create memories with kids given your financial situation? That's a great question. I did. My personal house is very nice now. I didn't like it before. I still don't like it now. But I agree with my wife. I think that we wanted to experience some of the fruits of our labor, and give our kids a nice house. So we did house hack my firstborn. We were still house hacking. We then got a single family house after we had our second born, and then our third one was on the way. Not a fit. And so that's when we decided to upgrade. And I told her, I said, I don't want to move a bunch. I want to get the perfect house. that gives us everything that we need. So we're the house that all the kids want to come to. So all of their friends, in fact, today in 45 minutes, all of a bunch of my son's friends, he's 6, just turned 6. A bunch of them are coming over to our house because we have the house that is the entertainment house. So it's a great question, but I can tell you, I put it off for 43 years, 23 years, 24 years of having a good job. I didn't live in single family homes by myself. And my 19th year of investing, I finally was like, yep, we got to buy this one. Because it was a steal. We bought it right when everything was heading into the pandemic. And so it was before everything went crazy. So I got 375. I got 4 something debt, but then I got 375 debt. I was able to refi. That was the best I could do with the bank. I should have left and gone to another bank to get my primary refied because I think I could have gotten it for 3. But yeah, so I live in a nice house now. Didn't used to. Didn't for a long time, but now I do. But that's more thanks to my wife because I wouldn't have done it. I would have been happy living in a duplex down by the river. Kyle Dorn, James Wells, 500K might be a minimum if you have an umbrella policy. Mine requires 500K. Then umbrella will cover in the scenario of the lawsuit. Yeah. So I think for me, yeah, I'm 500K and then I have an umbrella on top of that. Yep. I think the best way, the far better protection than an LLC is amazing insurance. That's really what it is. And we save 70 grand on insurance. We still spend 100, but we save 70 grand on insurance with picking different deductibles, a higher deductible. And so now over a 5-year period, thank God, we've done pretty well, not had any major issues. And so thankfully, that's a $350,000 savings now. Which if something happened with 8 or 10 of our properties, because of a whatever, we'd be okay. SK, do you see your ability to get more new purchase loans, because of 1, cash flow from your current properties, 2, increased net worth from appreciation, 3, cash flow from new purchase? That's a really good question, SK. Oh man, you're getting up. You're crushing it with questions today. Really good job. Cash flow. The bank wants cash flow. The bank wants cash flow because I'm aligning with the bank. They want more deposits. So my equity in my houses doesn't spend. They like seeing a seasoned portfolio, but they care far more. If you look at a typical bank when you're doing a number of deals with them and on the commercial side or things like that, what they're looking for is 1.2 to 1.25, sometimes 1.3 global debt coverage, which means for every $1,000 of debt that you have $1,300 of income. That if you don't have that and you go below that, then they can put you in what's called technical default. So the reason I mention that is because that's geared around cash flow. They talk to people and they say, hey, we want to see you bringing those deposits into the bank. And if not, we're going to raise your rate because we have the ability to do that. We're going to make you recast your mortgage. So what's that about? That's about cash flow and deposits. It's part of the equation, having the asset, but it's not, it's much more about having the cash flow. The new asset, cash flow from a new purchase, is less important. It's probably the least important of the 3. So I would say cash flow from current properties is probably 70%. I would say it's 25% is increased net worth from appreciation. And then I'd say 5% is cash flow from the new purchase. A lot of times they know that new purchase might not cash flow in the very beginning. They know that it's going to take some upstart. It's going to take some changing of things. And so a lot of times I use that with my bank and I tell my bank, can I get year 1 interest only? And they're like, oh yeah, we can do that. Or they say we can do 6 months. It just knocks down my payment for 6 months. It's a good idea because it gives me more cash to spend on the asset or to invest back into the asset. Robert Finelli, happy the house I'm under contract for had the Burma coat replaced with a PVC that year. Agreed. We talked about that in the course. And that's where that Burma coat, it's 2-3 grand. And it can be more, it can be 8. I've never seen it less than a couple grand. All-nighter, getting a judgment against a bad tenant, even if they don't pay, is a pay it forward warning to the next prospective landlord, correct? Absolutely 100%. 100%. That's very often when I was broke, I would feel bad that I was like, why didn't the last landlord just like take care of their business? We try and take care of ours. So even if we go into an agreement with the tenant, we still file it with the court. That way, if they're looking for some tenant agreements, if they look for their name will come up on court documents. So even if we don't get the eviction, we still show that we had to work out things based on what they were doing. Flavio Macias, in Washington, rents are going up like California. That's good news. Hyder, do you know what the largest historic rent drop has been in the last 100 years? I'm going to look it up. I think it's 4.5%. It took multiple years. I want to say the biggest in a year. It really depends on the asset. But yeah. All-nighter, what was it? Yeah, BF, I want to know too. I think the greatest was 4.5%, but it was over a 2 or 3 year period. It's never been down over a 5-year period ever. And even when it did go down, it didn't go down double digits. It was low singles. But again, it was a specific asset type. It was the new build stuff. It wasn't the existing home stuff. That's why when Zuber and I made our bet, it wasn't about new homes. It was about existing homes. Because new homes, they can tweak with the numbers, right? Like, I'm not sure if you guys know this, but in a walkthrough I did a few weeks ago, that was one of the things that I talked about. I talked about the fact that new home companies are basically buying down the rate, not giving away extra stuff. They're buying down the rate. They're saying, hey, so I know rates right now are 7.5. We're going to give you a 5.5% mortgage. Well, 5.5% is like a year and a half ago. It's completely different, right? It's a different everything. So that's what's helping drive single family homes, is the fact that they're buying down rates from 7.5 to 5.5. That's massive. That's massive. When them subsidizing that goes away and they're back to market at 6.5, 7.5%, they're going to see their lives change. SK, how much percentage does rent go up in your area over the last 5 years? SK, are you trying to set a record for good questions? It went up, I'd say between 20 and 30%. 20 and 30. Some of the stuff is 20, some of the stuff is 30. We have a couple outliers, nothing below 20, but we have a couple outliers. The market. So we haven't raised all of our tenants' rents that much. So yeah, I'd say between 20 and 30 typically, and then there's some on there that were like 50 and 60% rent because I bought the right property in the right area type of thing. BF, all-nighter, what was it? I bet he's looking for it. SK, do you try to increase rent every year when up for renewal? Not every year. What reports do you use to show and justify the increase? I build my own rent box, like what I talk about in my course. So I build my own rent box so I know exactly what they are, and then I present that to them via text. Just say, hey, just check out these 3 addresses and, let me know what you think. What reports do you use? So the rent box. I use Rentometer and also current listings in Zillow. My Rentometer will blow the doors off of that for accuracy and for giving you a better path to go down to make sure you're getting your best returns. And SK, this is a big important thing, right? So if you look at my portfolio against my competition's portfolio, my portfolio is much, much better represented by market and over market rents. It's better represented, which means I need fewer properties to make more money than they do. But even if I just keep pace with them, if you're caring about keeping pace with somebody else, if I just keep pace with them, my properties give a greater return. And that's all profit. It's all profit. So that hampers them in buying properties. I tell that story all the time about I have this guy who's lost 3 deals to me in an 18-month period. He's going to keep on losing to me because his math is off. He has the wrong data in his calculation. And so he always loses to me. So I know that he even sits there and goes, I'm going to overpay for this one. I'm going to beat you. Okay. You're not going to get me to overpay, but he thought he was overpaying for the last two assets and he didn't, or he wasn't his eyes. I wasn't in my eyes. I still beat him and my rents are crushing. Like the return is awesome. It's absolutely awesome. SK, if lease is up for renewal now, do you recommend to write next yearly lease till spring, say 16 months, to get a better rent comps next year? I do. The only thing you have to do is check out what the law is in your state with a lease that's over 12 months. I do it to avoid a real winter here. Like winter here is really, really hard. And so people don't want to move. And the tenant pool then is only people getting evicted. It's really, really bad here. So I don't want to be renting in December now, January, February, March. But we put some stuff out there now where we are going to do 6-month, 9-month, 15-month, or 18-month leases. We're not going to do a 12 because a 12 puts us smack dab in the middle of the next winter. So admitted, when it comes to bringing it to market, we want to bring it to market. We will get it rented. We will get it rented with a great tenant and it will be a great return. But yeah, we're going to do 6, 9, 15, or 18-month leases. Just make sure you check the rules in your state with what's allowed. Hyder, saw a chart and rent was only up and to the right since 1940. Generally, that's true. They plateau, so they will go like this, but then they don't go like this. They go like this, and then they go like this. They kind of float. And then they spike again. That's so good. That should go up there, Hyder. Robert Fernelli, I'd rather go after tenants if they play games and ruin their credit. Cash of keys enables them in the future more tenants to know about cash for keys, then they won't pay. I've never done cash for keys. I will never do cash for keys. I have never done cash for keys. I will never be that landlord that sets up the next landlord to get screwed. I will never be that guy. We had that opportunity to do it this time around. And with this latest eviction that we did, and he's like, well, we would consider leaving for $5,000. Nope. Well, then we're just going to stay here. You will until I get you kicked out by the court. Yep. I wasn't going to pay them for it. So they didn't pay. They got to stay an extra couple of weeks, cost me another $1,000. They weren't getting $5,000. They weren't getting $5,000. That wasn't going to happen. And they had to move into a hotel room. BF, all-nighter. If I had to guess, between 10 and 50% maximum drop in rent, probably in the Great Depression. Maybe. But we didn't see rents drop. So we had the Great Recession, right, BF? We had the Great Recession, and the Great Recession was pretty damn close to a depression. The only difference between a Great Recession and a Great Depression is the duration. You know, the Great Depression, depression is 13 consecutive or 12 consecutive quarters of negative GDP. A recession is 2. The Great Recession, I want to say, was either 6 or 7. So it was, just didn't last as long as the Depression. But they made some bad monetary mistakes during the Depression, which actually further hindered things and had it stick around longer. I think that they've been tracking it, Hyder. If you look, I think they've been tracking since 1914. I think they were tracking rents. I think it was 1914. It was 1910. Early 1900s, 1910, 1914, 1917, right around there. The chart I saw real quick was from iProperty Management. Was the first link. Yeah, you can find it. Keith Hager, with CDs so high on a current 5-month, 7-month, 9-month, and 1 year, would you suggest laddering and stacks different banks with the best rates for our dry powder to invest in the future? So Keith, I honestly don't play that game at all. And the reason why is because there is such a high likelihood that I'm going to hear about a deal that I can go get done. And it might take all my dry powder and I can't have any of it stuck. It might take 50% of my dry powder. I can't have any of it stuck. So I think that that's a great way to do it if you're money managing. I think if you're really truly looking at deals and you are in the area or arena where you might need to do a cash deal, where you might just to get it closed, where you might need to, do that for a seller financing deal that still wants a decent sized deposit. That's the only thing I would give you as a caveat. So for me, I'm not doing it, and I would never recommend doing anything that I'm not doing. And so I would say you can look at that, and that makes you more of a money manager. It's probably better. It's probably a better way to do it. But that's where I look at opportunity cost on my side. I've seen guys that couldn't get a deal done because they couldn't come up with the capital, or they were going to have to pay so much for the capital in that short term. It not only wiped away what they were making on their other alternative investment or other investments, but it actually cost them, where they lost that profit there and they had to basically pay to get out. So that's my thought. BF, you can always sell the nice house and move back to a duplex near the canal and invest the extra cash in more deals. BF, from your mouth to my wife's ears, I would do it tomorrow. I probably would build this unbelievably crazy duplex, but I'd probably do it with like a big, huge single family home and then like a ADU on the backside so it could still be a duplex. But yeah, I actually still might do that here. That's what I'm looking at now. Look up. Here's the Matt wife. Oh, thanks. Look up. Appreciate that. Robert Fairley, what does leaking oil look like? There was black water on the sides a bit. No response on concrete or ground. You can get a test kit. You can also literally take your hand, wipe it, sniff it. I'm a weirdo, but that's how I've done it. It usually will look like a reddish tinged. I would, if you think you have anything like that, you should be, like I always talk about, where the heck did it go? I thought I had one here. If you think you might have one, you need to make sure you get a diaper underneath it and go look for oil leak diapers. You got to get a diaper or two underneath it. I would put them in like a tub, a plastic tub that fits underneath it. And then just see if you're actually getting anything residue. After you wipe away and clean it, you can also use this stuff. This is JB Tank Weld. Stuff is fantastic. You should absolutely always have this in your go bag. Kudos to Landlord Odyssey. He mentioned having a go bag. And so I've probably got to do a video for you guys on what a go bag is. If you're a self-managing landlord and you locally manage, you got to have a go bag. I thought I had one for here for sure. I don't know. I bet one of my kids picked it up. Yeah. But they make these little magnetic leak stops. It sticks to the tank. It's got a little cushion pad on it. You push it up there. That's if you find that. But yeah, I would be getting that on it. I would be getting diapers in a low tiered, like those black totes that they have at the big box store. Get that underneath it. Because that's going to get really expensive if it is in fact a leak. The criteria, I think, is either 5 gallons or 10 gallons. And if a tank lets go, it's going to be 100 gallons. And now you're talking about an EPA mess. So thankfully, thank God, we've, been very blessed. G, hit the like button. Thanks, G. All-nighter. Mike, Millennial Mike mentioned a rent drop was about 5% and maybe not even for a year. That's seasonal though. If something is within a 12-month period and you see all that recovery, that's seasonal. That's where a lot of these people make mistakes. Rents go down in the wintertime in my area because it's wintertime and nobody wants to move with a foot of snow on the ground and ice and salt. So that's one of the things that I would tell you is it's seasonally adjusted. There he is, Booger Fart Boy. What is the lowest yield that is a deal maker? It depends on what your market is. That's a great question, Booger Fart Boy. In fact, you're going up on the big screen. Good for you. Yeah, the biggest. So I've done deals that were when I was newer in the business. I did deals that were 7%, 6%. Yep, I did. And that was because that's what it was going to be then and then I needed to fix it up and then blah, 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 and did all that other work. And, now that deal is, 43%. But at that time, it was a 6%er. And not one that you really find in single families. It really is in the small multifamily stuff. Kyle Dorn, amen to cash for keys. Not a fan either, especially in my market. Serve them 3-day notice on the 12th. They will be out by the end of the month. Exactly. I am not paying you for bad behavior. In fact, now I'm going to make sure that I'm getting into court and making sure that every measure of the law is used that you're going to pay. Because I need to protect the landlord that it's their first building, or it's an older couple and they moved out of their home and, now they're renting it out and they've rented out to these slobs, that don't care about anything. Yeah. Game on. All nighter. I'm definitely going to dive into rent history later today, jumping in the shower now. You got me, Hyder. SK, what's your typical gap between Section 8 tenant vacating and getting the next tenant in? Section 8 or not? Good question. Man, SK, dear God, you're crushing it. All this stuff is in my course, by the way. It depends. We have bad regular tenants. We have bad Section 8 tenants. The Section 8 tenants typically leave it much more of a mess. But it depends on whether or not we've redone the unit before. So if we've done a lumberjack package, we can probably get it back on the market within a week. If we've not done a lumberjack package, it's probably 2 to 3 weeks because we want to do the lumberjack package. We want to upgrade the doors and we want to upgrade the fixtures and we want to upgrade the lights and we want to upgrade the paint and we want to do all these upgrades that we like to do that makes it a much nicer unit. My concern is with Section 8, there are delays in getting inspections scheduled. That's the problem. But you need to drive that. You need to drive that with a prospective tenant because the tenant gets listened to much, much sooner. Let's see. Kyle Dorn, amen. Not a fan of cash for keys. Nope, already got that one. Sorry. Yeah, very fast. I love that. I love fast evictions. Listen, pay your bills. If you don't, go away. Keith Hager, I also have a checking account of $50K plus at 4.3, ready for a down payment with an 829 credit score. Love that. And that's what I would be doing. Having it at a high yield checking account, fine. Because what are you giving up interest rate points wise? Not a whole lot, but it's that access to capital. So I can fully endorse that message, which is high interest rate account from a banking perspective. Agreed. But then giving you actual access. Oh no, I'm kind of scared to press this from a tenant. Let's take a look. Oh, dear God. Thank God. Not an issue. So yeah, that's what I would do. I think that's a great idea. Yeah. High interest, high yield savings or checking account that you can get access to it. There's no penalty. 829 credit score. I mean, can't get much better than that. 21 points to be exact. I've literally scored an 850 before, but usually I'm hovering in the 840s, 841, 843. Then sometimes it gets into the 820s when they pull my credit the day that I have all my cards maxed that I haven't paid yet. Let's see. All right. All right. So just last couple questions because I got to go out for my son's birthday party. Okay. Last question. Here we go. Got it in there. All right, cool. SK, at what age should we think about estate taxes and planning for it now? Now. Yep. Now. So I did it right after I got married and after I got married years before I had kids because I knew I was going to have them. So we do it now. We did it then after I was married, a couple years after I was married, and then well before I had kids. Yep. Now. Now. Yep. Good question. SK, dear God, you rocked it today. These other questions were fantastic, but you guys know SK was throwing heat. Kyle Dorn, I'm sure you still don't regret doing your early deals at 7% learning curve and you got better and you also got started and took action. That's exactly right. I don't regret those deals at all. It's what I needed to do to get started. And then I got better and better and better and better and better. And so now I don't touch deals that are anything less than like 15%. I can do value add. I can do all of that stuff. That's why I did the course, guys. That's exactly why I did a course. I did the course specifically because I wanted to fast track people on the path that I got on that cost me hundreds of thousands of dollars, if not millions of dollars to learn. That's why I did a course. That's it exactly. Robert Fairnelly, can you get court docs for Tenant workout online? I think tenants with clean records but had to do workouts is a problem in Nashua and Manchester. I don't know about Nashua and Manchester in that regard. I know that you can go down and ask the court clerk, hey, so if everything is public record, how would I find, is that stuff searchable? And I would just be searching based on last name. So that's what I would ask them. I would ask a court clerk. I would go down and ask a court clerk. Mick, welcome to the channel. Do you have preferred window brands you like specifically for basements? Thanks. Great question. I'm more built, so it's not so much a brand as much as I want a spec. So the spec that I'm looking for is an Energy Star Plus window. That's what I'm looking for. I want an Energy Star Plus window. That's the thing that I'm most concerned about. Energy Star, sure. Energy Star Plus is what I'm hoping to get, especially in the basement. Because if it gets too cold down there, we're burst pipes and all just messes. So Energy Star Plus window. And then what you do is you get that spec, and then you can call the different window places that are close to you. And you can say, I'm looking for an Energy Star Plus window. They might call it something different. And so that's why when you ask around based on the spec, you can say, hey, I'll just send you what the spec is that I'm looking for. And they can say, yeah, that's our XYZ line. Because most of these places have 4 or 5 lines of windows. They go from, shop floor to fully custom, that sort of thing. So great question. Really good. Glad you asked it. Fast Cholo, welcome to the channel. Great name. What's your go-to paint brand and color for interior exterior? My color combination is Ultra Pure White from Benjamin Moore in their Regal Select product. For my interior wall color, it is Stone Harbor Gray, Benjamin Moore, Select brand. That's what I buy a ton of. Literally hundreds of gallons a year I buy of those two. It's a resilient paint, and you can go on the trim. You can go with something called a satin pearl. They're the only ones that have it. It's basically a lower sheen semi-gloss, more sheen than satin, but the pearl makes it more wipeable. Great product. Now, if you have an LLC, you can go in and sign up for a contractor account. Even if you have a trust with a separate, with an EIN, and shockingly, EINs are the same as socials, or they have the same number of digits. So you can open up those types of accounts a lot of times, and you can just tell them, yeah, I'm a rehabber. And you can say, yep, I can provide you with my EIN and get a corporate account, and you can get 10, 20, 30, 40% discounts year round instead of waiting for the sale. That's what I do. And like I said, we hundreds of gallons a year. I actually have to look at the report. I want to say we did man, I'm frightened. I think we did 300 and something gallons of paint this year. It was a lot. It was a lot. Well, guys, I'm going to head up to my son's birthday party. I hope you had an absolutely fantastic week this week. And I hope that you have a great week this coming week. As I always say, we try and create great content for you. If you are considering being a real estate investor, or you already are one and you think you can get better at your game, or even don't think you can get better at your game, please just check out the syllabus. I really want to see more people in the course, because what you guys have been the greatest encouragement to me, because I've heard nothing but great things about the course and people saying how much it helped them and how many thousands, overtimes it's saved them. Easy for me to say. So thank you. Thank you for always letting me know that it was an impact to you guys, because I really didn't want to do it. And I'm so happy that I did because of all the feedback I've gotten. And we're going to be starting up a new boot camp in I think a few weeks. I'm very excited for that. So hopefully you guys have a fantastic week, and we will catch you in the next one. Thanks, guys.